Hi, today is Monday, the 1st of February, and we're starting the week in a very different environment compared to last week, where the market was in a relatively high volatility, but still keeping its bullish momentum, and the whole thing broke out actually ahead of the FOMC. And we had Microsoft, Facebook, and Apple posting good results, and yet we had a very nervous reaction to FOMC, which was a non-event, no major event on the geopolitical front, other than, of course, ongoing news about COVID. So we can only look at this bit of tantrum as a technical profit taking, and or maybe the GameStop anecdote could have spooked some market participants. Very difficult to say. So I can't really find any good reason for this. So we just have to go with the flow, and we saw the market drop to bullish resilience around 37.30, and then it bounced quite strongly. And we thought for a while that after clawing back above the pivot level, that the market would resume to its bullish momentum, but no, it was broken and it fell again on Friday, closed around 37.10, 12, and when the market reopened, even tested this level, which is the first flip target on this pattern. And then it seems to be recovering a little, and we see that 37.50 is very much still the test level. It may not have the same interpretation because it's been really passed on the upside and downside several times, but it's still quite a major level going forward. What can we read from this is that volatility as per VIX is extremely high. It has not really dropped even when the market recovered to 38.30. We had VIX at the 27.28, and on Friday, and even on Friday, it reached 37.50, which is a pivot level there. And we can only hope that the market will probably try and find some equilibrium and maybe put the backwardation onto pause, because as you can see from the VIX term structure, we are in backwardation with a March and April volatility quite high compared to entries a while ago. So we are still having a very nervous market, and at best I would say that flattening of the term structure around 29.30 is probably what the best we could expect. If the market falls again, the backwardation will steepen, but let's hope for the best that it will not happen. So back to SPX. This is a 4-hour chart. So for the next 2 days, I would say 37.50 is the key. We may have a downward channel forming here, so we have to be careful. And the market could actually drop to 36.30, which is the first fib on the long-term pattern from the bottom a while ago, early November. Maybe the best way to have a look at this pattern is to move to the daily chart. Here we are. Here we see that this, and here, I mean, something I said even last week is that 37.50 resistance has held all along. So we could see this as a short-term excursion, but yet halfway through it, it bounced on this one and to reach new high around 38.70. So now, if this capitulation on the bulls, from the bulls, yes, it could reach 36.30 or maybe lower. So we have to be very careful going forward. Profit taking was long overdue, and now we can look at, of course, possibly sector rotation, because the small cap, the Russell, was on fire for too long. Maybe some profit taking also on the tech sector. And so there's definitely a lot of market participants really pressing on the brake pedal. It's time to reflect. And I mean, for some, the high 3800s were the target for the year. So it would make sense the market goes into a pause. The only problem really is the volatility that came along with it. So at this point, I wouldn't discard the market eventually going back to 36.30 and maybe 35.50 in the next few weeks. Now, if we now look for the outlook for today, the channel is about here. We can actually try and plot it here, something like this. So yes, the market could drop a bit further. And if I clone this line, this is maybe a channel. It doesn't look like a proper channel, but I would say that the downward bias is definitely stronger. So And if we have the market going up with volatility going down, it's going to be a time to maybe massage your positions and reduce risk. We are going to look at this in the next video. So at this point, we have to be prepared for the market hitting 36.30 at some point. If otherwise the market passes 37.50 and does a better job at it, like as compared to Thursday, Friday, where it tried to bounce off this one, but it was a failed recovery. If there's another attempt of recovery and then 37.50 is tested as a new support, then we could go back to a bullish momentum, but that's a little bit far-fetched at this time. Okay, so that is it for now. It's a difficult market, mostly because of volatility. The movements have been abrupt, however, still manageable. It's mostly the volatility for those of you like me who are generally quite vague and negative that we may suffer in the short term. Okay, thank you for watching and bye for now.